Hello, everyone. I am going to do a very short video today, a very simple one, but a lot of people seems don't fully understand what is FDIC insure. So they keep telling me, oh, the bank is the safest. Yes, the bank is relatively safe, but if you understand what is the FDIC insure, so when you walk into the bank, the first thing you will see, they posted on the window, is FDIC insure. What is FDIC? FDIC is the Federal Depository Insurance Corporation that insure in the event of the bank fails, your account will get compensated up to your account limit, your account balance, or no more than $250,000. That is FDIC insured. So a lot of people, they have their checking account, CD account, money market accounts in the bank. Some of the friends even have their business account, but under their name. They just do this side business, probably have a little bit income, but that account is under their name. It's going through Schedule C. Another one is they have some joint accounts also. So how do we calculate those accounts? How much is FDIC insured? For a lot of friends who never listened to my recording, and I am a CPA by train, have been practicing tax consultation, tax preparation for over 30 years. Also, I'm a financial advisor for the most recent 12 years. I have helped a lot of families to save taxes and through financial planning. So I'm a advisor myself. Okay, so basically, how do FDIC determine how much money you're going to get? Okay, let's do first of all, let's see how that works. When you have several bank accounts in one bank, so number one, what you need to do is to just a sec. Number one is to sort out what are those accounts. Okay, this is number one. Now, how are you going to sort it? Okay, so now when you're saying accounts by type, we're actually saying accounts by whether it is a single account or a joint account or a corporate owned account. Okay, so this is the most common types. When we say by type, it is not checking, savings, CD. Okay, it is by ownership. Okay, so remember, sort it out by ownership. Okay, so single account, you can have a couple, and joint account, maybe you have a couple, and then it's corporation. Okay, and then some people will maybe have some money market account. Okay, like Fidelity, a Bank of America love to have their money market fund accounts as in your bank account. So when you open your bank account portal, you can actually see your money market fund. Why this there? Because it's a cash equivalent. It does not mean these accounts will be underinsured by FDIC. Okay, first of all, we know that money market fund is an investment account. So it's not going to be covered by FDIC. So if your money market account, even though it's sitting in your account banking portal, it does not mean automatically covered by FDIC. Okay, so after we eliminate this money market account, this money market fund, okay? So there are some other money market account. We're going to see some example. Then you have to see how many CDs, how many maybe savings, and how many of these accounts. And corporation, very important, corporation, okay? It is a business checking account. So if it's a business checking account, or it's a business checking account under your name, okay? So if it's under your name, so it's added to these single account as is your account, okay? So after you add this is your first category. The second one, the second category, it's your business account. So you have a business checking and you have a business savings, okay? So these two is going to lump to one category. So we call it A, okay? So this is B, let's say. Now, your FDIC will apply in two categories, okay? This one, they lump all your account together and see whether you are exceeds $250,000. And they look at your checking account and your business savings account and business checking account and see whether you are over $250,000. So they apply them separately. Okay, let's look at an example. Okay, this Linda has a small business and Tara has a small business and she has all these accounts. First of all, we look at her single account, right? Single account has $10,000. Yeah, we're going to sort her account first, okay? Checking account, saving account, all under her name, single. We'll put them together. Now, checking account, it's a little bit tricky. Checking account she has with her mom is total $200K. But when it comes to FDIC, it's split it in the middle. So Tara is going to get $100K of that checking account to sort them together. Okay. So another one is her business. She has a small business, a side business, and she she doesn't register the business under her business checking account. I'm sorry, she doesn't open the checking account under her business name. Instead, she opened it under her name. So that counts too. Now, here's a money market mutual fund co-owned with her mother. Now, this one does not count because it's an investment account. When it comes to money market, look for that. Some of the account are deposit account. When it earns the interest, it deposit into it. That is a deposit account. This is like a savings account. So this one will count. But because she is co-owned with her sister, so only $10,000 will count. And here's another one, another single account. That is for her business, but she put away the money to fund the SEP account. So this account is actually her own. She put it up as a savings account and accumulated some money to fund her checking account, to fund her SEP account. So this 180 will count. So if we add up all these accounts, we total come to $340,000. Okay, and her FDIC limit is 250. So she exposed about 90K, right? That is not covered by FDIC. It says 340, 250, yeah, about 90K that is not covered by FDIC. So important. There are a couple of things, very important. How are you going to maximize your FDIC insured? There are a couple of things you can do. Number one, before we go into that, I want you to take another look at the joint account. Okay, so here she has some joint account, and you said, okay, her mother also co-own accounts with her. And can we use her mother's quota to set up to fund some of the to count some of the FDIC? And the answer is no. Let me explain to you how that works. So if you have a joint account, okay, a joint account, Tara with her mom, let's say 100K. So basically, they will divide it into two. So Tara has 50K, mom has 50K. So if Tara has another joint account, let's say with her sister, this time is total 400K. So she will get 200. Her sister will get 200K. Okay. So if Tara has another joint account, let's say with her husband, okay, there's a 10K here. Total 220K, okay, husband get 10K. So basically, she already exceeds the $250,000 limit. So she leaves herself $10,000 uninsured. When the bank go bankrupt, she's going to lose $10,000 here. Okay, you cannot use mom's, sisters, and husband's quota. These are not going to overspill. No. Okay, so that is another thing. Got to keep in mind when you have joint account. Now, let's come to the point how we are going to get all the FDIC insured possible. Number one, you need to diversify. You need to put different checking account, joint account in different banks, right? So when you put it in different bank, and they will calculate it based on that bank that is falling, right? So when a banking crisis come, you get separate insurance from separate bank. Okay, another thing is never put your business under your account right here. Okay, you put your business under business. If you put it under business, and you are going to have a separate 250. Another one here. Your sub account. If you set up a separate account under business name to fund the employees as employees contribution in the SAP, each employee is going to get paid up to $250,000. And while you putting the money here and accumulate it under your name, you're going to get only $250,000 commingle with the rest of these funds. Okay, so hope that help. And if you need further help, and just let me know. I am in Connecticut, and here is my WeChat. You can scan me, you can text me, and don't email me. Text me is the fastest way to get me. Okay, hope you like it and hope it helps. Bye-bye now.